An Ontario couple's nightmare home purchase. Stephen Curry, NBA All-Star, but now he's stuck in a controversy around affordable housing. And Amityville from the horror film house just sold. That's pretty crazy, huh? So let's get into it. What's up, everyone, and welcome to Scale Through the Film. My name is Robert Bean, and I am your host. And listen, we're going to be jumping in today. We're going to be talking about a sweet couple buying their dream home and it turning into a nightmare. And why did it turn into a nightmare? And is it something that could happen to you, or is it something you could avoid? Are there precautions that you can take? We're also going to jump into NBA superstar Stephen Curry and kind of looking into this very unique situation that he's in, where he's kind of getting called out for being an advocate of affordable income or affordable housing, and yet not wanting affordable housing near him. Interesting. But what are his reasons, and are they valid? That's always a fair thing, right? Let's look into the reasons why. And then just a little fun one, the Amityville horror house from the famous movies. I believe there was 3 of them. I can't remember now. Just recently sold. Can you guess for how much? But of course, before we get into all of that, we are going to make sure that you know what the mortgage is going on. Larry, what's up, brother?
What's up, boss? How you doing?
Thanks for jumping in. I know you're at a mortgage conference. I feel like it's a really good example because it's almost like you bring a trainer on and the trainer is in the gym and you're like, yeah, that's where you belong. So it's like, cool. It works. It works. Yeah.
Yes,
So
yes.
Larry,
I'm learning a lot here. Hopefully, the noise in the background doesn't bother you guys. Sorry
we'll
about that.
survive. Listen, we'll survive. We do this show for free. So anybody has a problem, they can go watch someone else's show.
Yeah, no refunds.
No refunds. Yeah. So Larry, would you let me know what the mortgage is going on, man?
All right. Mortgage rates are now back above 7%. And, we talked about this in the past. We tell people you need to go out there, get prepared, get pre approved. I mean, literally, I'm closing loans, but I'm locking them below 7. Let's just put it that way. They're all below 7. Okay. Because they're already under contract. So basically, the thing that we were afraid of might happen did happen. The rates are going back up. They're at a 4-month high. Okay, so I think the lowest rate you might find would be like the November was when it was last this high. So we've actually passed November, right?
Yeah.
So like I said, we don't want to be the I told you so guys, right? But
well,
really,
listen, we should kind of pat ourselves on the back because I'm actually pretty impressed with how frequently we've been right when talking about the rates. We both said right before spring kicks off, they're going to jack up the rates because this is the first time they're actually being proactive, apparently. They're going to jack up the rates, and then I bet you guaranteed after spring, maybe end of summer-ish time, we're going to see a drop in rates because they're like, okay, phew, we're all right. We survived spring, right? But it's like, stop shooting yourself in the foot because we are the I told you so guys. And we're telling you so because we want you to pay less in your mortgage. Like, please pay less in your mortgage.
Yes. I mean, like I was saying earlier, I have clients that are buying right now. They're all locked under before the rates went up. In fact, I had a lady who was chilling, and I told her I need to lock the rate for you, and I told her we should do it right now, and we did because I heard the rates were going to go up, and they jumped up like almost 0.20%. Probably saved her another. I saved her 17,000 initially, but I probably saved her another 10, 15,000 as well. So it's because she was in that position, and that's what we're trying to help you guys get into. Now, I'm not saying that you shouldn't go in and get pre-qualified now, but put yourself in a position where you can actually make a decision the moment something changes in your favor or when you see danger happening, right? So, like I said, last week, 6.82%, it went up almost 0.3%. Right, so now
Mm-hmm.
it's 7.10% right now, and of course we were dreading this because I don't think on the show, Robert, we've ever seen a seven. Both the what the mortgage in the history of what the mortgage, we haven't seen a seven. We've only seen sixes
Yeah, I
or
think
lower.
you're right. I think we've seen high fives,
Mhm.
um, and then I think just I don't think with sevens. I think we've gone all the way up to like 6.9 at one point, but I
Yes,
don't think we've
possibly.
seen a seven. And I wish we could say we will never see a seven, but here it is
Yep.
out there in the open,
History,
exposed.
history is made.
All right,
uh,
so let's talk about the mortgage bonds.
yes, the mortgage-backed securities, they did go up in value this past week, but they dropped a little bit since yesterday, right? But this is good news, okay? Because again, the higher the bond is being sold at, the lower the rates are going to be, right? It's an inverse relationship, so to speak, right?
Mm-hmm.
And you know, some people might be confused by it, but just the more bonds are being bought, the more valuable it becomes, the more confidence they have in the
Yep.
mortgage industry, so the rates go down. That's basically what happens.
Yep.
Okay, if they're not confident, they're not buying, and then the prices start dropping. Right. So demand for bonds is good. Hopefully that makes sense. But yeah,
It does.
that's
It absolutely does. Well, I mean, it does to me. If it doesn't make sense to you guys, leave a comment. We're here to support you. If you leave it in real time, we'll usually be able to answer it. If not, we'll get back to you. Larry and I are very good at responding to all the comments as long as we see them. Sometimes
yes,
Facebook trolls us, but generally
yes.
we see them. So make sure you tag us on that. So
Mhm.
let's look over kind of just the week of a week snapshot of it all.
So as you can see, we have the 30-year fixed at 7.10%. Now the other rates are not quite in the sevens, but they've all increased, right? So it's fair to say that they're all in the high sixes,
And they're
right?
headed in that direction.
Mhm. They're and you know this is I know that all the loan products are different and everything, but for the most part, they all kind of follow the same
Well,
trends,
I mean,
right?
look
Like,
at it. 6.58, 6.5, 6.5, 6.5, 6.54.
yep.
Like,
It,
you
it,
know,
it'd, be, it'd be very strange to see one go up and another one go down. They're always all going to go up,
right.
or they're
The
always going
only
to go
one
down.
that can get a little wild is something along the lines of like the arm,
The
because
arm is the arm. I can't even talk about. This is the weirdest product ever.
right, because
Yeah,
it's like it's literally designed to be um liquid is what I was going to say.
yeah, yeah.
Like it's not set in stone.
Yeah, it's the anti-market loan product, right? Like
Yeah.
they're trying to, yeah. So I don't even want to get into that.
All right. So what does the numbers mean, Larry? What are we
So
looking at?
because the rates are now back above 7%, obviously that's going to impact home buying, people applying refinances. Because if they were hesitant at six, they're going to be more hesitant at seven. It's like things got worse, right? People were waiting for things to get better, and they got worse. So I don't see any uptick in applications or people wanting to buy. But we're telling you guys that you need to apply so you can be ready when it goes back down.
That's
Like
right.
I'm
You don't
telling you
have
now,
to buy right now. Just be ready so that
yes.
if the opportunity is available, you can strike while iron's hot, as they say.
Yes, yes. So from my perspective, if I had borrowers that are thinking about like get it pre-approved, get ready to get under contract, let's get under contract. Okay, we're in the sevens. Let's wait until they're like in the low sixes. Low sixes, let's lock it right away, right? Because you
Mm-hmm.
might not get this like, chance again, right?
Yep.
But yeah, it's been a 4 month high, right? Which of course will probably be the highest for 2023, right? And the problem is what the data is telling. Everywhere we look, we're seeing indications of hotter or increase in inflation, right? So not just the Fed, but like what's going on overseas, what's going on with the different growth markets. It's all indicating that inflation is growing or increasing, right? Which of course is what's creating this fear. Because again, I've talked about this before. Inflation is the enemy of low mortgage rates. If inflation is high, mortgage rates will be
I
high.
mean,
Okay.
inflation's essentially the enemy of any type of consumerism, because
Yes.
that's literally what it's there to do, is to curb, right? Curbing inflation basically means discouraging people from borrowing money
Yes.
from institutions.
Absolutely. So
Would you
again,
agree?
higher
You think that's
inflation.
pretty fair to say?
Yeah, absolutely, absolutely. So, like I said, higher inflation and economic growth, it makes traders want to sell their bonds rather than buy it, right? Which
Right.
of course affects the MBS price. Like we said, if they're selling it, the demand is lowering, then the price is lowering, obviously,
Yeah,
right?
and it's really a domino effect because what happens is that's why like every single president that I can recall has always said the housing market dictates the economy for America. The U.S. housing market dictates the economy. Like, and most economists do look to the housing market, not the stock market. They look to the housing market first as an indication of the health status, if you will, of the
Yes,
economy overall. Because if people are buying and selling houses in a healthy way, money is moving very naturally, very, very consistently. But when we have screeching halts and sporadic things, it throws it into chaos. Because remember, real estate, quotation marks, that means disclaimer, is the
yes,
safest investment. Okay.
yes.
So the government believes that too. They do. The government believes that real estate is the safest way for them to gauge the economy. Now, it's not the only way. Understand that, guys. I don't want anybody, well, no, they use all the. Listen, I'm just saying that listen to the president speak, listen to economists speak, and typically the housing market is a huge, huge consideration for when this is going on. So, Larry, I want to throw an idea at you, and I want you to tell me if it was a genius or it's an idiot thing. Okay, what do
Yes.
you think instead of? I know hindsight's 2020, but I think it's healthy to talk about it. What do you think instead of when we saw a screeching halt, pretty much come right around October, July, October, right through those periods where it was like it really did jump, it doubled. I mean, it really did. It was not, in my opinion, was not very gradual.
No, it
It was
wasn't.
like, hey, we're gonna test the waters. You're gonna go into the high threes. Oh my gosh, you're in sixes,
Yep.
and we hit some sevens too. What if instead of this up and down that they played, let's say October, they said, hey guys, we're gonna hit 7.5, and we're gonna just leave it there until spring? Because I think what happens is that any smart investor looks for consistency.
Hmm.
And for them to why did we hit a below 6 and now we're 7 in what, 3 weeks? The last 3 weeks?
Hmm.
I don't I could be wrong. I'm willing to say I'm ignorant and maybe I'm an idiot. It's okay. I'm open to that, but I don't see the logic in it. Where's the value?
Well, I'm gonna. There's an article that I use a lot of my information, or the source. There's an article in the source I use to get my information from. I really want to read what they say because it really kind of explains everything. It
Okay.
explains how why mortgage rates are right. So not that you're an idiot, but most people don't understand this, and that's why I'm going to read it word for word the way they present it because they do a really good job of explaining it. Okay. They said mortgage rates have been hit hard on two fronts over the past month. The first front is the obvious one. The bond market has moved in a way that forces rates to go higher. To be fair, it's almost always the bond market that forces rates to go wherever they're going. So the bond market literally controls that. So to control
Right.
the mortgage rates, we have to control the bond market, right? And the bond market, it's all supply and demand. That's all it
Mhm.
is, right? So you can't control supply and demand for the most part. Okay, the vast majority of day-to-day movement in rates is a simple function of trading levels in specific bonds. This has been and will continue to be the case, possibly forever. Right? Forever at February and now early March, economic data caused traders to worry about higher inflation and resilient economic growth. This makes traders want to sell bonds more than buy them, and that results in higher interest rates. But bonds aren't always everything when it comes to rate movement. The everything else category, which is my fifth takeaway, changes in composition depending on the landscape. For instance, during the 2021 refi boom, rates were often limited by mortgage lenders' capacity to handle new business. So what I mean by that is the rates could have gone down lower, Robert, but because lenders could not handle the business, they kept the rates high, right? Like
To
the
essentially
rate.
price people out.
Exactly.
Yeah.
Well, because okay, let's put it this way. How many people you think would refinance and buy if the rates were below 1? Everybody.
Everybody.
Everybody. People would find a way to qualify, right?
Mhm.
Right. So the rates stayed above 1, right? So basically the point I'm making is that rates were able to go down because of the bond market trading, but because the capacity of lenders, they're like, we cannot do that because our phones will explode and we'll
Well,
all
that's
like,
very interesting that you say that because I didn't think about that. I only thought about the Fed side of it because I would argue that most of the time they're the biggest um, influence because bonds are extremely sensitive to the rate hikes or rate
yes,
adjustments at all.
yes,
But I think it is very smart and very wise for you to bring up the fact that, listen, there are other contributing factors, right? It's very similar to it's supply and demand. But if you
yes,
don't have the supply, you can't meet the demand. It's no different than 100,000 people saying, I want to buy homes, and all the builders in the area go, great, but we can only build 50,000.
exactly. Exactly. That's exactly a great analogy, right? Us loan builders don't have enough raw materials to build these properties. We don't have enough land to build. Everyone wants a loan. We don't have enough raw materials to give it out.
Yeah,
That's exactly what happened.
that makes a lot
So
of sense.
so they keep the price. They keep a price a certain
But
way
it
to
feels
kind of.
like my idea still would have worked then. It still feels like because then it would have just curbed people for longer.
You're right. Okay, so yes, collectively lenders can decide, right, to keep the rates at a certain point, but
Well, I
that
was
would be
talking about the feds. Why
well.
didn't the
I don't.
feds just keep it at 7 or 7.5 versus 1 week 7, then we drop down in the 6s, then we go up high 6s, then we eventually get down to 5s. Now we're in 7s again, and it's like, what is it? Think before you speak, right? Think
Right.
before you act. Are you? And again, anybody's willing to. You're willing to correct me. I'm not saying I'm a know-it-all. I'm saying I'm trying to be really objective when I look at these things, and I go, why didn't we just let it hit a high like it did?
Mhm.
July/October, that range, and just leave it there and allow itself to balance out versus saying, okay, things are kind of looking good. We're going to drop it. No, we don't need to do that because we don't know if it's looking good. It's been a couple weeks. You don't
Right.
know anything. So why are you making moves without the data? Because that's my struggle. It's like, honestly, why are we making adjustments week over week? What information are we supposed to do with that? How can you make a sound decision off of a week's worth of data? The average person hasn't even had a time to respond. Most of them won't hear about the news that we talk about today for a couple weeks.
Yeah.
If at all.
Yes.
You know what I'm saying? So that's what's going through my head. And listen, Jerome, if you're listening to this, I'm not insulting you. You can call me out and tell me that there's more. I'm open to it. I would love to have you on the show, man, and give everybody a lesson on how this goes. But I
Right.
just feel like in every other instance in business, and for anybody who's saying that bonds are not a business, they absolutely are. And the government is a business, by the way. For anybody, for any other business, you don't do that to your customers because that creates volatility, right? When Netflix raises their prices, you don't see them go down again. And usually they try to compensate. Now, maybe Netflix is a bad. Maybe we'll use a little bit more of a material product. You go into McDonald's to buy a burger. You don't see the burger price drop. They make an adjustment based off of what they have available, based off sound data. It's usually
Mhm.
not week over week. And they say that's the new prices. And then
Yes.
if they want, they can do sales. And what I would call sale is temporary drops, which we have seen. We have seen the
Yes.
Fed do temporary drops before. We have seen the temporary hikes. Those are your sales, your discounts. Those are what you use to incentivize people, but you got to create your baseline menu. Everybody should expect 7%. Great. Now people know that 6.5 is good. Right now, nobody knows what's good or bad.
Yes.
So how do we make an educated decision? Obviously, they need to tune in and listen to our show so they can listen and we'll help them. But otherwise, for everybody who's not watching our show, how are they supposed to know that 6.5 is actually good
Right.
until it's too late, right? Until it hits 7.
Yep.
But if we had a baseline, 7's the normal, then when you see 6.5, you go, okay, that's good. And the people who do care, the real ones who are actually serious, because there'll be tons of people who don't take advantage of it. But the
Mhm.
ones who are serious go, that's the time for me to move. And now the feds actually have a tool to use to stimulate when they need to stimulate. At least that's what's going through my head. Maybe I'm too simplistic.
I would say that we're all too simplistic, not just you, right? Because I have a microcosm in my head that I live in the mortgage world, but I forget that the mortgage is just a small part. We are just a small speck in the whole economic
True.
universe,
You're
right?
right.
So the Fed is actually using rate hikes to manage short term loans, not long term loans, right? Mortgages are long term loans, right? So it's almost like the Fed, of course, they take into consideration the mortgage rates, but that's not what's driving them on what they do.
You're right. That's a very good point. They
Yeah,
are
yeah,
looking at the immediate future.
yes, inflation. That's what they're trying to fix, right? Inflation. They're trying to fix what's happening right now, which affects everything else, obviously.
Yeah.
But it's not like Jerome's looking at the mortgage rates. Like, okay, we need to do something about this. No, that's just a small piece of data in the big scheme of things, right?
My minutes go way over. We gotta get to our funny facts, man.
Okay, yeah.
Gee, sorry. What's the fun
yeah.
fact? Every time, man. Every time I'm like, please don't say it. Please don't say it. Random funny facts that make it go, what the FF? All right, like, we got a fun one today, okay? True or false? These items were invented in Canada.
Okay.
You ready?
Yes, I'm ready.
Please be maple syrup related options. The light bulb. Some are going to be easy, some are going to be hard.
No, that was. I always thought it was in America. I thought Thomas Edison was the one who invented the light bulb, right? Isn't he American? Yeah, I would think he's an American.
Okay.
Okay. Oh no, that's Canada. What? So maybe
here's
someone
the thing, okay?
They invented
Thomas
a crappy
Edison,
one.
he was in Ontario when he actually completed it. So technically, the light bulb was actually invented in Canada. Boom.
Yeah, but
is that not crazy?
That's crazy. But 99% of the work was done in America, I would say.
Yeah, I know. But the funny thing is that the actual term is, what is it? True or false items were invented in Canada. The idea, but the actual iteration of it, the actual completion of it, right?
Was a kid. Yes.
Yeah. And there's a couple more details around it. Some of this was very fascinating, and I had fun. And I was like, I knew I was gonna throw you off with a light bulb. Okay, the telephone.
Oh my gosh, I'm gonna do the same thing. I'm gonna guess it's an American. Alexander Graham Bell is an American.
Mm-hmm. No. And fun fact, the first long distance call was also made in Canada.
Wow.
Is this not crazy?
I'm surprised by that, yeah.
All right. Now here's a random funny one.
Hawaiian pizza? I mean, it's Hawaii. Hawaii is a state in America. You know what I'm saying? I mean, that means Hawaii invented it, so it has to be American. Oh my god! So it's like fake Chinese. Chinese food that we eat is not even Chinese.
Right.
Yeah.
Like, it's not Chinese food. It's not from China. They just call it food there.
Yeah.
The history of some of these things. I was like, we don't have enough time, but I totally wanted to break down the history of them. I got one last one. This is easy. Okay, I wanted to give you something.
Oh, you're gonna trick me, dude. I'm gonna guess Canada, but I think it's America. I should guess Canada though, but I'm gonna say America.
So here's the crazy part, okay? I had to do a lot of work on this one because I wanted to find one that would make Canadians mad, right? Because Canadians often boast and they talk about it being the birthplace, hockey being the birthplace in Canada, and they have a city that's their slogan. Now, there's always like a lot of debate on when something actually is invented, especially when it's a sport, because every sport has had so many variations over the years. Like soccer, when did soccer become soccer?
Mm-hmm.
Right? When did or football is a more older term of it, right? When did it really become what it is? Because there's been people kicking around a ball and scoring in a goal for a long time.
Right.
But here's where this is where I feel it's really sound. If you look 1875, I have to do this one. 1875 is when Canada boasts about the first pro hockey game and all that, right? Now, some people say, well, don't worry, it goes back even farther. 1853, right around there, they had Canadians playing hockey. Okay, so Canada's got a lot of history here. If you go back even further, it's believed that there were even tribes in Nova Scotia playing in 1815. Still Canada, okay?
Wow.
But in Europe, we have letters, get this, from Charles Darwin to his son who plays hockey. So those letters are from 1780, 1790. So in Europe, they were talking about hockey. And in fact, the name hockey derives from a beer that was served traditionally at hockey. It was called Hoke Ale. Okay. And so that was like traditionally served at hockey games, these matches, right? With a puck, a stick, right? A rink, like that type of thing. And so part of the name of hockey even derives from Europe.
Wow.
So it wasn't just the sport, even the name. And we have the I think it was Prince Edward VII. There are so many notable people in history in Europe that played hockey or loved hockey. So it's actually really, really, I thought that was really interesting.
That's weird.
It's so crazy, right? Oh, man, I wanted to blast this out to all of our coaches and Agent Mafia because like half of them are Canadians, so they could just be really mad.
Yes.
I gotta send this to Brad and Shane and cause a riot.
They're gonna tell you it's fake news for sure.
Canada's gonna issue a bounty on my head.
You're gonna cancel my Canada.
All right, buddy. So listen, agree or disagree. I want you to fact check me on everything that I sent you, but make sure you really do your research because I did. You bring me that superficial Google stuff where it's just a paragraph on the front. I'm gonna be like, get that Wikipedia out of here. Like, let's go. All right. So today we learned interest rates are up, sadly, but surprising. We told you so. We're going to tell you again, don't have hope for the future. Take advantage of what you got now. I'm telling you, even if you can make the sevens work, and remember, what works for you means you sit down with your loan officer, you sit down with your agent, you go over all your finances and your goals, and you come up with a reasonable plan. It doesn't mean you just go and do it. Have an educated, honest conversation. Be transparent about your debt, your income, your goals, where you're at, including the spending they don't ask you about. When you sit down with Larry and he's talking about your income and your expenses, he has very specific things he's looking for. But you need to tell him if you spend $800 a month on takeout.
Yep.
Because he can't read your mind. Right. And he needs to know so that he can help you come up with a good plan to make sure that you don't end up in a bad situation. Because if you can make it manage and the rates drop down, let's say in a year, right, you can refinance.
Yep.
Right. But we don't want you in foreclosure.
Yep.
All right. Mortgage-backed securities are down. No surprise there. And then that not only is Canada a beautiful place, but it's a place of invention and maple wonderment.
Except for hockey.
I tried so hard to find like some maple syrup inventions, but it is almost impossible to trace the history of that because like native Indians have been using it across the world. Like, like who drove a spigot first to get maple syrup? And it's like, I have no idea. And it's like tea. Like the Chinese have been using the tea for so long that a lot of people believe that they invented tea, but it's like, putting any type of thing in a drink, in water, is kind of tea. So, like, you really can't trace that. So, hockey was the best I could do. All right, guys, thank you for watching. We do this every week. We help you to know what the mortgage is going on. Sometimes I go off on a tangent. It's usually when we're talking about the feds. Not because I hate them, because I'm really just trying to understand, can we do better? As a collective, can we go to Jerome Powell and say, we want better? how can we expect them to do better if we have no expectations of how to get better? So that's why we have these conversations. Jerome or any economist out there, you can join in on the conversation and teach us and help us, because to be honest, I listen to these reports, I listen to them speak, and it just sounds like they're not sure either. That doesn't mean they aren't sure. It just means the way they're communicating doesn't make sense. It really doesn't. So anyway, thanks for watching, Larry. I know you got to go. Enjoy your conference. Thanks for jumping in. Guys, we are about to jump in. Larry, have a blessed day, brother. And be thinking about all these Canadian facts. Go here. That's your icebreakers for everybody. Hey, did you know hockey wasn't invented in Canada? Just hope you don't talk to a Canadian. They'll slap you right there.
Right. Later, boss.
See you, buddy.
Yep.
All right, guys. So listen, we are about to jump into some steamy topics. And so, of course, if they're steamy topics, I've got to get one of the steamiest men of all time, Chris Rains. Chris, what's up, brother?
I'm here.
How you doing, man? Good to see you.
Undo a couple buttons here. Let some of this steam out.
Yeah. That's a good idea, man. I just don't want you to overheat. You know what I'm saying?
That's it.
So listen, buddy, you really walked into this one. We're gonna have fun today. I think we're gonna be able to help a lot of people, maybe, and also teach a little bit about hypocrisy in the real estate world. And hopefully that'll serve people right. So we're going to start it off with from dream home to nightmare, an Ontario couple's housing crisis. So let me give you kind of the bullet points, Chris, and everybody.
An Ontario couple's housing crisis, eh?
No. Yeah. I'm American. I don't say A.
Eh?
Yeah. B.
No?
C. Man, you just letting the Canadians have it, huh?
Yeah.
All right. So here's the bullets and highlights. And this is really, really important because there's a lot to be learned here to protect your clients, protect yourselves as agents, and then help our industry's overall viewpoint, like the way that people perceive the value of agents in our industry. So Fernanda and Santos and Gustavo Pereira bought a 3-bedroom home in East End in Ontario, $730,000 last year ago, pretty much a year to date. They felt pressured to become homeowners despite knowing the housing market was overpriced. And listen, it's okay to say overpriced. Overpriced because people weren't able to afford it. People weren't able necessarily to buy it. Now, if you don't like the word overpriced, it's okay. You can just say they weren't in that market range. That's fine. So if you hear the word overpriced, don't think too much for it. It was beyond their budget. Let's put it that way. It was beyond what they were comfortable with. So now here's what happened. They're paying $4,400 a month on their mortgage. And the home has dropped $150,000 in value. Now, why is that? And we're going to get into that, okay? Because this is very important. And of course, just like in the US, the Bank of Canada raised interest rates, which obviously heavily impacted the value of homes, because when people don't have as much money to spend, then they look at a $750,000 home and they go, well, I can only afford $600,000. So that's where they value that home. It's very simple. It's very, very simple. The market is crazy volatile. Anybody can walk in, and the moment they buy it, that's the market value of the home. Like, that's how simple it is. If nobody buys it, it's not market value because it's not proven that it's market value. So despite they both have good jobs, combined, they make over $140,000 a year, which is pretty great compared to most people in Canada and the US. And yet they're struggling to keep up with, and I quote, hidden costs such as property taxes and insurance. We'll come back to why anybody would say those are hidden costs, okay? And then the couple, here's what's crazy. They drive Uber Eats and Instacart on the weekends to offset their bills, and then they use their savings to buy groceries. And now they've put off starting a family because they believe they can't afford to do so. So that was a lot. So
they're probably right.
Huh?
I said they're probably right.
They probably are right. And then we started doing the articles. I know you guys can't really see it, but I want you to know they're real. This is the actual couple, and I appreciate them sharing their story because it creates an opportunity for people like Chris and myself to have an honest conversation about what's going on. So lessons learned. What are some of the key lessons homeowners and real estate agents can take away from this story? So Chris, I'm going to give me your initial thoughts right away, and then we'll kind of unpack it a little bit more.
Oh man, my initial thoughts is trusted lender that is going to break down all of these costs. So from an agent perspective, it's really not the agent's job to break down all the costs at the end of the day. You can kind of make your clients aware of some of it. And
you give them ranges, normal market ranges based off data, but you never quote them.
Yeah. So we can't be held, completely responsible for that. And that's why we got all kinds of disclaimers and everything else. But the root of that is having a lender that looks at all of their debt to income ratios, what they're actually making, what their surplus weekend income is, if they're counting any of that, if they've been doing it for 2 years or whatever that is, and really making sure that it's within range for those buyers, because the market going up and being overpriced doesn't have anything at all to do with their current income and bills and being able to make that mortgage payment. If they qualified at $730,000, it doesn't matter if the house is worth $500,000. They qualified at $730,000, so they should be able to afford it.
Mm-hmm.
Right? That's the way I look at that. So the property value going down, that doesn't change your month-to-month costs.
And there's some important things that you just brought there, right? Is how did they get a pre-approved if they couldn't afford it? So there's a couple of things to unpack there. And guys, everything we're saying is a general statement. We have no idea what happened behind the scenes, okay? So we're making some general statements here. One is that maybe the lender didn't dive deeper like they should have. Yep. What mortgages require, just so everybody knows, the average mortgage, let's put it that way, requires is not an account of every dollar spent. So what happens is they're looking for fixed costs. You owe a car payment, you own student loans, you owe another mortgage, you owe medical bills. Sometimes it depends on the type of loans. It depends on what state or country you're in. So don't quote me on that one, right? But they're looking for things where basically there's a lien against you. Let's put it that way. Someone could take legal action against you. They will look at sometimes your credit cards, but they won't look at everything usually. However, I would argue, and I actually mentioned this earlier with Larry, that between the clients and the lender, they should give them a total picture of all the money they're spending in and out. Because what happens is that people go, oh, I can afford a mortgage payment of $4,000 a month. But then they forget that they spend $800 a month on groceries. They spend $200 a month on gas, and they start factoring in all these things. So maybe the lender didn't do the due diligence. Maybe the clients didn't turn around and weren't as transparent as they needed to be. We don't know, but what we know is that both sides can always do more to try and get to the bottom of it. It's really important for people to have a very, very holistic and total overview of their finances. Otherwise, you get into a situation because, like Chris just said, their home falling in value doesn't change the fact that they were qualified for a mortgage. So how did they end up in the situation? Now, another note that I see here is that they eventually switched to a variable rate. Now, it's not clear whether they started with that or not. I'd have to check the article again. Variable rates, that's maybe where the risk came from. So maybe what happened is that they saw mortgage rates were really low. Remember, guys, like 3%, maybe even lower in some places. So maybe they saw that and said, that looks good. I'm going to get a variable rate. Now it jumps up 6 to 7%. So now their monthly, right, essentially on what they're paying and their interest doubled, if not more. So it is very possible. But here's the thing. What kind of lender put them in that position, and what kind of client, if it was the client, whoever it is, was pursuing that? Where was the conversation had? Did someone discuss with them, hey, listen, what are you going to do if this rate doubles? It's a variable rate, right? So there's a lot here. Another thing I want to mention is this is very important, a quote from them. They felt pressured to become homeowners despite knowing the housing market was overpriced. I'm going to be real with you guys. I have empathy for you, but you're grown adults.
I want to be real as well. Dude's 34. I'll be 34 on Monday. I bought my first house at 26.
Mm-hmm. If you notice here, it says, everybody said to us, you can't probably read it, but you should buy as soon as you can. Doesn't matter if you like it or not. Just buy and get into the market.
So
listen, it's the old.
He should have been able to buy it in his early 20s. I mean,
that's a different conversation. We don't know.
It's not a different conversation.
I mean, I didn't buy a home until I was 29, 30.
Okay, he's 34.
I didn't have the money coming in. Like I just didn't make the money.
You can't be a victim all your life though. He's trying to play victim. You can't stay victim all your life. And 30, I mean, there's some people that don't become homeowners for longer than that. But I mean, what choices was he making along the way that got him in the predicament that he's in, that he couldn't buy at 26? So
maybe he got a good job. Maybe he got out of school and finally got a degree. I mean, that's a pretty common story. But I think a bigger picture here is that essentially they're blaming gossip and peer pressure for their financial decisions. And that just doesn't make sense. If you call me, Chris, and you go, Robert, trailers are the next hot thing. Go spend $200,000, buy all the trailers you can. And if I go and buy those $200,000 worth of trailers and they drop in price and they aren't valuable and I can't sell them or whatever, that's not your fault. Yeah, maybe you should have been a little bit more respectful and been like, hey, listen, here's what I'm doing and why. But at the end of the day, a house is an investment and you are responsible as an investor. You can't just say, well, everybody told me. Well, if everybody tells you to burn down your house, are you going to do it? If everybody tells you to live in your car, are you going to do it? It doesn't mean we can't have empathy, but there has to be some individual responsibility that comes back to you and says, why am I doing this? Logically, does it make sense on paper? If it does, then it doesn't matter what anybody else is telling you because it fits your goals and fits your needs. You can have things drop in price. As being an investor, you will have seasons where things go up or down. What, you think the people who bought in the market crash of 2008 didn't see a plummet in their home values? They did. And they held out. And now all of those people that held out are so far in the green, meaning positive equity. And when I say all, I just mean not actually all. There are, I'm sure, scenarios, but the vast majority of them are extremely well off because they held through a difficult season. So I think that's just an important place. So as an agent, Chris, what do you think agents should do to make sure that this doesn't happen?
So, I mean, you're trying to control humans, which is impossible. So, I mean, they can't be controlled. It's like herding kittens. I mean, like 20 at a time. It's just not going to happen. You're not going to be able to control them from doing whatever you think they're going to do. I mean, I can set a deal in front of people and be like, hey, look, this is why it makes sense. I mean, even investors, like, this is your profit margin. And then they're going to go buy whatever they want. They're going to do whatever they want to do. Mm-hmm. I can present facts. I can present data. I can present opportunities. But at the end of the day, they have to be responsible for themselves, and they're going to be. Mm-hmm. So I can advocate for them, but end of the day.
So I'm going to give people a simple tip that I use. One is I always make sure I say it, even if they don't want to hear it. And sometimes I'll disclose it. Let's say Chris is my client. He's an experienced investor. He flips homes, but I'm still representing him. What I'm going to do is I'm going to go, hey, Chris, I know you're experienced, so bear with me. I'm just going to say this so I can say it and said that I said it. And Chris will be like, all right. You know, he'll be relative. He doesn't want to hear it because he's experienced, but he understands that I'm basically saying I have to disclose this. So you can tune out if you want to, but I've got to say this. The other part is I leave a paper trail everywhere. Okay, let me be clear. If this couple feels that their agent misled them, did not provide them accurate information, there could be recourse. However, if Chris is my client and he's upset with me, but I have an email trail stating very clearly, hey, buddy, great talking to you today on the phone. Here's what we talked about, the pros and cons of what we're doing next. Here's some things that you need to be wary of. And you have a paper trail. You're protecting yourself, right? You are. And I know that sucks because we all want our clients to be our friends and our family, and we're heroes and we're champions. But at the end of the day, like Chris said, we're all independent humans. We're going to do what's for best for us. And most of the time when humans make mistakes, they don't own up to it. They look for someone to blame. And you are the glue. When the ship goes off course, they don't blame the passengers. They blame the captain. And whether you like it or not, you are the captain. That doesn't mean that you can control the waves, but people will blame you anyway. So you have to understand, you've got to protect yourself as an agent. You have to. And now your broker, who defends you in court, by the way, they are the ones that will go to court. They can turn around, take your emails and say, nuh-uh. They did a good job. They made sure that everything was written and clearly communicated to them. Now, that sucks, guys, but we run businesses here. And that is the reality. And I don't see many agents do that. And it does leave them vulnerable and exposed. So that's one thing that I would say is you make sure you communicate it, whether they like it or not. Doesn't mean you have to do a presentation. And then you reiterate that in a written form somewhere so that you have a paper trail. And that will protect you as an agent. And that will ensure that your client essentially had two opportunities to hear the same information. One, when you directly gave it to them, and then two, when you followed up with them with it in an email. So you gave them not just one, but two opportunities to have access to information that could help them make a decision. Hidden costs, man. What the heck? Property taxes and insurance under hidden costs. Can we talk about that? How are those hidden costs?
Yeah, pretty certain every time I've ever gotten a loan, there's like all these different things that I have to check off and say this. Yeah, I understand. I'm paying all this. Great. Let's move on. So
yeah,
they might have signed with a blindfold on
and that does happen, man.
One of these numbers that, or, he expected his wife to read it. She expected him to read it and nobody read it. And they're like, oh yeah, it looks good.
I mean, that happens. We both know that the vast majority of people do not read it line by line. It's true.
Even my docs, like I'll send them to clients and they trust me so wholeheartedly that I'll send them over and within 15 seconds, they've signed everything and sent me back 18 pages of documents. And I'm like, wait. I am not taking responsibility for this. Go back, read it. Call me when you're done.
Yep.
Yeah. Go back and read it. I don't care if you sign it. I want you to go read it.
Yeah.
I know you didn't read all that stuff. Go read it. Let me know what questions you have. If you don't have any questions, I know you didn't read it because I know you're going to have a question of some sort if you read those.
Yeah.
I want to be able to clarify it all.
I make sure that the lenders, when they send things, they send them in written form. When the lender calls and he says, yeah, I let them know I just got off the phone with them. I'm like, great. Can you send me an email and CC me on it and them on what you talked about when you talked about money, what those rates are, what the payments are going to look like?
Yep.
Give me a paper trail. It keeps the lender accountable. Listen, we got to keep each other accountable. They need to keep me accountable to do my job. I need to keep them accountable to do their job. But again, it creates the paper trail, right? For everyone. It makes it very clear because nowhere in the history of property should property taxes and insurance be considered a hidden cost.
Mm-hmm.
And I'm trying to be really respectful, but it's like, how can you buy a home and not assume that there would be property tax and insurance? I mean, most apartments now are requiring you to have renter's insurance. Like you drive a car, you have to have car insurance. Why wouldn't you think on the most valuable investment that you have to have insurance? Like there's got to be at some point, like some amount of individual responsibility. Truly, it's tough. It's tough for me to say that, because it's like crap. Like I feel like a jerk. I really do, because I bet they're going through a very hard time right now. But I hope it's a strong lesson for agents and clients to learn from this, which is you need to do your due diligence. Always. Do not listen to someone else's opinion and take that as fact. You need to decide for yourself, what can I afford? And if it makes sense, it makes sense whether the home's worth $730,000 or $650,000. It will make sense for you, right? Dominique says, That's why I speak to my clients in monthly payments instead of price of home. And before I make an offer, everything goes to the lender to verify the monthly payment. Great advice, Dominique. So what she just said is she doesn't just tell them the home price. She doesn't just say, hey, the home's worth $730. People don't understand what that means. She says she makes sure that they understand what the monthly payment on that looks like. And then this is very smart, before they make an offer, they verify with the lender what the monthly payment of that offer would be. That's solid. That's really smart, Dominique, for you to do that. So props to you for doing that service to your clients, verifying before the offer goes in. Because once that offer's in, like, man, that ball's rolling. If it's accepted, that ball's rolling. So I think it's very smart that you place the liability on the lender to make sure they verify it, and that and the offer's monthly payment. Because that's another thing I've seen, is that they'll go off of a monthly payment for an entirely different loan product that they talked about 6 months ago. But what is the monthly payment on the offer you're making? That's what really matters. So Chris, Chris and anybody else listening, what are some precautionary things that you do to keep your clients out of trouble in these types of situations? Like, Chris, I know you said, one, you call them out. If you send them 18 pages of documents and they send it back in 15 seconds, you say, listen, I'm your parent. Go do your homework and then come back to me. Okay. Yep. Like, we're not playing this game.
I truly appreciate your trust in me to do everything correctly. However, I'm human. I'm not perfect. I want you to make sure, for your records, for your sake, that all the docs are correct. I want you to be that double check for myself. You know, I'm human. I could make an error. I want you to check it too. I want you to also be responsible for what you're signing. So I'm not perfect. For all those of you that think I am, I know it's hard.
I mean, that's everybody pretty much. So
everybody, I know, but end of the day, I could leave something blank. You know, I could miss a signature line. Who knows? Like, it could be anything.
You are human. Like, at the end of the day, we are human.
It's gonna happen. So
I always remind my clients and the agents I coach and everything, I always tell them, and I tell you guys on this show, I do my best, but I'm not perfect. Maybe I missed context. Maybe I didn't have all the details. Maybe I misinterpreted something that was said. You've got to do your own due diligence.
Yep.
And it gets easier, though, when you have a good agent and you have a good lender and you have a good title company. You surround the clients with all these great people, and it does make it easier because all of them are going to have checks and balances if they're good. They're going to be reiterating, they're going to be rechecking things and asking questions. But at the end of the day, it falls to the clients. And I think it's very smart to remind clients that the responsibility is still always there, and to teach them, though. Don't just tell them, Chris, you got to go do your due diligence. What does that even mean? Educate them on how to do their due diligence. Right? Educate them, help them out. All right, let's move on, because we're definitely not going to get to the third article. This next one I really want to talk about. So, Chris, news or noise on this couple in this situation? Like, is it worth talking about?
It's a bunch of whiny noise.
You think so? So you think it really fell on them?
I think it's noise. They have to make their own decisions. You're responsible for what you do. It's not like somebody intentionally messed up their lives.
It doesn't sound like it at all.
Doesn't sound like it to me.
Yeah. All right. For everybody listening, news or noise, leave a comment. And moving on, what should you do next? Educate your clients, create a paper trail. Pretty much that. All right. So this next one, we're going to have to breeze through it real quick, but I think it's a really good topic to talk about. So Stephen Curry is a massive superstar in the NBA. And he a while back, he had joined the a board to advocate for affordable housing. Great. That's awesome. Love it. I love it when celebrities use their authority and their power to benefit causes that they believe in. Even if you don't believe in the cause themselves, they're doing something to hopefully benefit others. He has talked many times about how he's part of this nonprofit to quotation marks bridging the racial wealth gap. Great, awesome, love it again. And then they decided the city that he's in decided that they were going to build affordable housing near his $30 million mansion. And then all of a sudden, Stephen Curry wrote a letter to them to ask them not to. Very interesting, because at the end of the day, how much do you believe in his mission when he won't even stand by it? I mean, it just seems a little odd to me, right? You know, I don't know. I think that when someone goes up into a public space and says, I advocate for this, I'm going to hold them to that standard, that they are an advocate for that thing. But then when they turn around and that thing is there for them to advocate for, they go, oh, but not that close to me. So it is a real thing. I mean, this guy has been featured at the White House talking about bridging the racial wealth gap, coming from a guy who has a $30 million mansion. Listen, you have to understand, and it's kind of like
he needs help to me. Like, we should help that guy. Poor fella.
Yeah, you know what? It seems like he's got a little too much. And it seems like that him and his wife sent a letter saying they were worried about, they had major concerns for their privacy and safety. And I was like, well, you can't have it both ways. Affordable housing goes where affordable housing goes. And for those who don't know, I spent a lot of time researching affordable housing, actually. The zoning on affordable housing is very difficult. It is way harder than almost any other development to build. It is so strict. Surprise, the government's involved. It's so strict and so tedious that there are not a lot of options in most cities to build affordable housing. Even if someone's willing to build it, there are not a lot of options. It's also absurdly expensive. It's way more expensive to build affordable housing, and then they rent for less, which means it's an unprofitable business. Okay? And I'm not saying that's good or bad. I'm saying just have an understanding of how that works.
I think a good compromise here is Steph Curry buys that property and then buys another property, builds some affordable housing elsewhere, and foots the bill for it. I think it's a good idea.
I think that's putting your money where your mouth is.
I think that would be putting your money where your mouth is.
Right. And you bring up a good example. It would be like
next door. Great. Buy the lot, buy another one, build it, fix the problem, move on.
Right. It would be like me saying, hey, listen, I advocate for homeless people. I want to feed them and help them. But that doesn't mean that I want them showing up on my doorstep asking for food. Let's put it that way. But if I do nothing else other than discourage them coming to me as a source, I'm a problem. I'm not an advocate. But if I turn around and say, hey, listen, I support a food bank over here at my church. Let's say my church does a great feeding the 5,000. Shout out to them. And I go, I monetarily support this and serve at this, and this is where you can get that food and that alternative. Everything I read was that Stephen Curry had no alternative. So basically he said, someone else help these people. I won't. I'll talk about it all day long. I'll go to the White House. Yakky, yakky, yak. Then, and remember, they're not on his property either. So my analogy actually isn't that good because they're not on his property. They're next to his property. Right? And he still has a problem. I look at that and I go, man, don't trust the government or a celebrity to care about your housing needs.
It kind of seems like a strange place to build buy a $30 million house too, if there's room next to it to have those low-income affordable housing. Like, where did he choose to live? That's the other strange question.
Atherton, California. I lived in California and I don't know where that is.
I don't know.
Anybody know where Atherton, California is? Anybody live there? I would love to know.
So let's talk about this, because if you're going to buy a $30 million mansion and you're going to spend or a multi-million-dollar mansion. Yeah, it is a $30 million mansion. If you're going to buy a $30 million mansion, okay, aren't you going to want to do some due diligence as to what the property zoning and what the other comps and stuff right around you are? Aren't you going to want to look at that and think, okay, what can all of this other stuff be? What are the comps going to be like around me?
Mm-hmm.
I mean,
I think that's a good point.
I would think that some due diligence on the front end when you're purchasing, especially at a $30 million price point, you would think that you're like checking all your, I's and crossing your T's and all that stuff. And even if not Steph, his agent that got paid who knows what for helping with all of that. You would think that the agent would be serving the client there and making sure that some of that stuff's good. Now, you can't blame the agent, but if Steph Curry wants to give me a call, I'll go in and do all that due diligence for him.
Absolutely.
And help him out. Let's do it.
Like, Steph, we'll get you out of this predicament. I promise.
We got you.
We got you. Okay.
Got ideas.
But I think that's a good point too, Chris, is that he made a decision to buy only what he bought where he bought it, right? In other words, he didn't buy the lot next door. He didn't buy the multiple houses, which, by the way, guys, some celebrities do that. They will buy everything around them as well to create a buffer. Whether you believe that's right or wrong, that's a personal choice. I don't care about it. I really don't. But my point is, Steph turned around and he bought a single property that had availability to be used otherwise around him. There was land and homes to be used around him. If he has a problem with that, then he needs to go and be like a Dutton in Yellowstone and buy 200,000 worth of acres so that nobody can even get close, because if that's a problem, or he could be like Johnny Depp. Johnny Depp went and he bought a penthouse and all other penthouses near him on this giant high rise so that he didn't have neighbors. You can do that, but don't blame the government and tell them not to build on land that's perfectly reasonable for them to build on. Sure, you can advocate for it, but then maybe you shouldn't advocate publicly that you're for affordable housing, just not near you. That to me seems like hypocrisy. That to me seems like you made a decision and now it's backfiring on you.
I mean, I don't want affordable housing right next door to me either. Depending on the property that I bought.
Yeah, but you're not going to the White House talking about how you're a spectacle of bridging the racial wealth gap.
I moved out to the country specifically to be able to choose my neighbors. I looked at the land. I looked at the houses next door. I looked to see what's going to be subdividable, what's not. Like we looked at everything surrounding. All right, it's impossible for anyone to put a neighborhood directly behind us, directly beside us, or directly across from us. They can't do it. The terrain will not support it.
Yep.
So,
for everybody watching, do you think Steph Curry is reasonable? Being a public advocate, sitting on the board for affordable housing and all of this, and still not wanting it near his home. Do you think it's reasonable? I'm genuinely asking. I have one opinion. It doesn't make me right. I'd love to hear your opinion. How does this make you feel? Especially if you're someone who lives in affordable housing. How does it make you feel for a star to say, I care about you, just don't get near me? Do you think that's reasonable, or do you think that's hypocrisy?
And it's called affordable housing, but that's subjective.
Well, yeah, and the thing is that I spent a lot of time researching affordable housing, a lot of time. And actually, I'll probably do another segment on affordable housing because I actually think it's a great conversation. And a lot of the landlords I knew said the affordable housing tenants were some of the best tenants they had because they have vouchers. For those who don't know, Section 8 has vouchers. And you can get reported and lose your voucher very easily. The laws were changed to prevent people saying, oh, the government will cover my costs. The government said, no, this is too expensive. You can lose your voucher for breaking noise ordinances. Okay. So maybe the flip side of this is maybe Stephen Curry doesn't even know what affordable housing is. Maybe he doesn't even know that from the hundreds of landlords I talked to, I would say about 80% of them said that the Section 8 were the best tenants they had, which, by the way, I want to let you know, I had a stigma in my head. I did. I hear the word affordable housing or low income in my brain. I'm going to be honest with you, right? My brain, it immediately assumes that it's going to be low quality tenants. You hear the word low income, you assume. That makes me wrong, by the way. It's just natural. We hear low, we assume low, right? But I went and did my research to make sure that my bias is not coming out. And so when I went and researched it, my opinion totally changed. And I was like, whoa, really? I didn't know that. 80%, I would say roughly 80% of all the landlords I talked to said Section 8 was their best, and they continue to have them. So maybe Steph Curry, maybe these could be the ideal tenants to next to him. Maybe these could be the best people he would want next to him, because if they're breaking the law, they have something to lose. The vouchers. So who knows who moves in next? They might be 10 times worse than what he could have got. So maybe Steph Curry, maybe do a little research in affordable housing before you turn around and push it away. See, I think Dominique so Dominique's experience says that she had was near affordable housing and had a bit less ideal.
There's going to be a difference in a large development and, one-off duplexes and that kind of stuff too. So it kind of depends. So Robert, depends on who you're talking to. Do they own a huge complex? Because the more people that you put in any area, usually the higher the crime's going to be. If you've got a lot of people together, you're going to have people that are having disagreements. You're going to have people.
It also depends on the area. Listen, you can go to Atlanta right now. Sorry, Atlanta, I'm going to say it. You can go to Atlanta right now, and whether it's Section 8 or not, if it's low income, it's probably going to be a really bad neighborhood. Go to LA and go to any low income neighborhood, and you probably won't be able to distinguish it from a Section 8 or not. You won't know, because there's so much already ingrained in those cities. It is so hard to the words gentrification. It's so hard to bring that into something that is so concretely established. It's an established, if you will, I don't want to say the word slum, but like it's an established, very underserved neighborhood, poorly kept neighborhood. So it is remember, there are people who said, I don't really like it and it was a bad experience. And what I found from those people was they were already in bad neighborhoods. The neighborhood around them were not great. Now, that's not always the case, guys. It's not always the case. It's subjective. Guess what? It goes back to do your own research, make your own decision, own up to your decisions. Steph Curry, own up to your decisions. Don't be a hypocrite. Own up to it. Right? Don't advocate publicly and then have a problem. Yep. Dominic also says, man, Dominic, you a star today. Really engaging with us. Thank you, by the way. So she says, I also agree with both of you about what is nearest mentioned, that it was also that it allowed that type of zoning, right? Like, don't forget that you can actually, Section 8 doesn't always mean low income in the way that you might be thinking. Section 8 sometimes is low income, but in a very wealthy neighborhood. And when I say neighborhood, in wealthy cities, low income may still be people who are far above poverty, right? Homelessness. So like I've met people through these discussions that we're talking about that have said that they had people who had good jobs. It's just that the overall expenses made them low income, but they were not low income people in the sense of what we think, right? Ghetto and slums and borderline homeless. Some of these people are someone who recently got divorced, who had a great job. I know someone who had 30, 40 rental properties and then got divorced and lost it all. Does that make them, they became low income after that because all their income was gone, right? So income wise, they became low income. They actually qualified for Section 8. That doesn't make them less of a qualified person. So we have to know that. And the one thing I'll say that I noticed about amongst those who had the best success stories with Section 8 was screening. They had great screening programs and they set standards for their tenants. They vetted them and they said, if you break the rules, we will report the violation to you. We won't let it slide. What I found is that people had negative experiences often try to take matters into their own hand instead of reporting the violations, and it just strung it along and created animosity. All right, guys, we didn't get into the Amityville, but it was actually just a guess. So, Chris, the iconic Amityville horror home has been sold. Just take a guess. How much?
$2.3 million.
That's not a bad guess. I should have told you. It's 4 levels of living space.
Okay.
Lots of it's near Tom's River, so basically water, very close to waterfront.
Okay.
And then obviously it is shrouded in mystery and history with the films that it's been in and used for. So it's actually less than I thought. 1.46 million.
Okay.
But what I found out was there was a fire.
Ah.
Yeah.
So
Yeah.
I would have probably been pretty accurate then.
I think so. I absolutely think so. So I'm going to give you a win on that.
Give me a win on that.
Definitely.
I'm pretty certain
But my question is, what's next? Are buyers going to start paying top dollar for houses built on ancient burial grounds? Is that coming next?
They might.
They might. All right, guys. Thank you for tuning in. Chris, thanks for staying 10 minutes over. I appreciate it. We gotta cover that topic. I appreciate everybody tuning in. Thank you, Dominique, especially for being the top commenter. We love it when you guys engage and share your experience. Dominique is also a real estate agent in Florida, right? Yep. Dominique's a real estate agent in Florida. Love seeing real estate agents active in news and learning about it. So props to you, Dominique, for just staying in tune with everything, having perspective. You're amazing. You're awesome. Chris, thank you as always for when you jump on the show and share your insight. And for everybody else, we will see you next week. Thank you, Chris.
Later.
Thank you again, guys. That was Scale Through the Fail. We go live every Friday, 9 a.m. Central. We talk about what's news, what's noise, and what you should be doing next to win in the market. I hope you enjoyed and brought value from what the mortgage is going on, and then the articles and discussions we had today. And I look forward to seeing you guys next week.